Good afternoon, everybody. Welcome to Trader Merlin Show. Sorry for 10 days off. Man, it was different being gone for 10 days. You didn't really think much about the markets. Did a few trades along the way, but sorry to take so much time off. It's holiday season, I think y'all understand, and I'll be gone a few days over the next couple weeks as well, as I'll be traveling to Charlotte to teach a cryptocurrency class in North Carolina. So I hope y'all had a fantastic holiday. It was fun. I got to visit family and friends up north, and just good to get away. Of course, we got today, we have tomorrow, and then markets will be closed on New Year's Day. So really coming down to the final 2 days of the trading year, and as you guys see here from my graphic, it's really one more day. Oh, one more day. That's it. So I thought I would give a little precursor to what may happen tomorrow. Obviously, we started January with our first show of January of this year was all about forecasts and saying, all right, what do we expect the market to do in 2024? And of course, the results were all over the place. It was kind of interesting seeing how spread out they were. We had some people thought the market's going to be down 25%, others thought it'd be up 76%. But let's look at that, because I think the winner could be someone very interesting and maybe even put those shot glasses to use. So here's where we started off the year 2023, and I will go over this tomorrow when we have our final numbers, but just want to look at it real quick just because I know you guys have been asking. We were at 47.69 when we started on December 31st, or last day of the year last year. And this is the few, I think there was 6-7 people who thought the markets were going to be down for the year. Larry actually thought it'd be down for the year, and that was pretty much it. Tom said down 18%. That's probably why he doesn't watch the show anymore. He's embarrassed. He decided to run away from us. But as you go up that list, I had a pretty weak forecast, which was 7% based off historical numbers. That would have put the SPX, which is the index I'm going to be using for this, at 5102. Well, right now, we are looking at 5906. So we'll keep scrolling up here. Some of you, Big Eb, you're out of the money, barring an unbelievably horrible day yet tomorrow. But I'm scrolling up here, and a lot of names, a lot of familiar folks are going to be missing out on that one. Mike LaRusso, you're going to miss out on Margaret as well. You had a good forecast, but 14% would be a nice one. But we're up here. We'll probably close right around 25% gain for the year. And if we look at the number as of today, which is 5906, right now, Les is the closest. He's 39 points away. Actually, no, I'm sorry. You're 130 points away. And Corey is about 100 points away. So it's going to be most likely between Les and Corey here to get the final result for the year. So, good for you guys. Congrats. We'll see how it all ends up. Of course, anything can happen between today and tomorrow. But that's where we'll stand for the end of the year. And, of course, I will do the same thing in January, although I'm out of shot glasses. So I'll send the 2 shot glasses to the victors here, and I'll have to make some more. Ask Michael. Let me know where you got those shot glasses, and I'll maybe make a big order for you so I can get some more shot glasses. There's prizes on this program to give some more stuff away. All right, that was number one. I do want to go into the markets, but I want to talk a little bit about this gentleman here. We've, regardless of where you stand on our current administration, different presidents, whatever, presidents have become a target where people just love to hate him for one reason or another. It depends on, which candidate it is and which party they are a part of tends to be the big catalyst for hatred towards a president. However, you look back and there are a few that were pretty much accepted as they were just downright good people and really wanted to help out the human cause. And James Earl Carter, was one of those. And he made it to triple digits, made it to 100 years old, passed away today, actually it was last night. And I just thought, I wish there were more presidents like him. I wish there were more presidents that treated everyone fairly, and even if he didn't like the guy, he still treated you with respect. I think that to me is one of the things that I look at from a elected official perspective. I believe presidential means that you should treat everyone fairly and you should respect people. And Jimmy Carter kind of exemplified that, always working with Habitat for Humanity and just doing things to help out good people. He's one of 4 presidents to have won the Nobel Peace Prize. Did not have the best president, but it was great. Exactly. Yeah, and that's a tough trade-off too, is it's kind of like finding the perfect partner. You're never going to find the perfect one that fits every box. Was he the best president? Probably not. It was a little bit before my time. I wasn't really into politics at the time, obviously. But as a human being, just a really, really good person. And that goes a long way. In my book, being a very good person goes a long way. I appreciate that. So just so you know, they will be closing the market in remembrance of Jimmy Carter. That's going to be January 9th. I don't think that's going to be a recurring thing, but just kind of as a day of honor, which is an interesting way to do it. Shut down the financial markets for a day. Interesting. That'll be January 9th, and as the details emerge more about it, I will let you know what exactly those details are. Jimmy did his best thing after being president. Yeah, right? 4 presidents, by the way, won the Nobel Peace Prize. You guys name them? You guys name the 4 presidents who won the Nobel Peace Prize? There were 4 of them. You would think that as a president, like every president should win the Nobel Peace Prize, right? You're doing things to help the world. So, yes, you're doing things to help out the United States, but in theory, your actions should be helping out the world overall. You had Theodore Roosevelt, Woodrow Wilson, Jimmy Carter, and the last one to win it, Barack Obama. Barack Obama won the Nobel Peace Prize. All right. Yep, Obama definitely won it. All right, let me go into the next topic, which we'll talk about just some of the economic data. As you guys know, this week's pretty boring with regards to economic data. There's not much going on. Today is one of the bigger pieces, which was pending home sales. Now, the media was really hyping this one up as like what a huge beat on this number and how great it is. Well, I wouldn't quite jump that gun yet. However, the number was good. We had 1.8% was the previous month's reading. They thought we'd decline significantly because, of course, rates have been rising. So they thought that might put pressure on the housing market. It came out at 2.2%. So we can kind of make some assumptions about this data here, which has been on the rise. And let me zoom in just a little bit here so we can get past the COVID whipsaw. And you'll notice that the past 4 readings have all been above zero. This is great. Obviously, the one we saw in October was a bit of an outlier, but from my perspective, it's the trend that I'm looking at. And you're seeing increase in pending home sales, which is good. That's a sign of economic growth. It's a sign of economic activity, just stability, really. Now, if this does continue to move up here, you kind of question, well, why are we seeing such a surge? And I think it's partly that people believe that rates are going to be rising on the long end of the yield curve, as we talked about with Bill Addis. Yes, the Fed is pulling down the short end of the yield curve, but because of many other factors, that long end is now normalized and starting to move higher and higher. So there might be a good portion of these buyers who are being told by their agents or just know through their own research that the long end of that yield curve may continue to go up, and therefore I'd rather try to get a mortgage at 6.5% on a new home versus 7.5 or 8. I'll lock it in now and I'll refinance later. If it drops down, fine, we'll go with that. So that is actually a pretty good piece of economic data for today. And as I'll show you right here, if we look at the list, you really didn't have too much else. You had Chicago PMI numbers, which are still pretty bad. You can see here they came out worse than expectations, but Chicago isn't really the main economic driver here. But look at that. We've been pretty much below zero since 2022 on the Chicago PMI numbers. That's Purchasing Managers Index. It's basically how do these different managers feel about the economy at any moment in time, or at least at this moment in time. Chicago just looks like just dismal. So this isn't one that I hang my hat on. The Empire State Manufacturing Index I like a lot. Philly Fed Manufacturing not too bad, but our second piece of housing data will come out tomorrow. Of course, we'll talk about that. Right now, the expectations are we're going to see a similar decline from 4.6% to 4.1% is the expectation now for the Case-Shiller Composite 20 Home Price Index, which would be in line with the trend that's been happening for about the past 7-8 months. Now, if it does follow suit with the pending home sales, we might actually see this tick up. All in all, I think that would be a rather good thing. Increasing home prices means more wealth, means more spending. And of course, if we get into 2025 and we start hearing about tax reform and lower taxes, that means more spending, more consumer discretionary spending, potentially even more real estate. So it could be a nice driver for the economy going around. And Big Ed says, looks about right for Chicago. Yeah, Chicago not looking so good. Detroit starting to look a little bit better, certainly from a football perspective. I saw a funny thing for my sports fans out there. It was on Twitter, and it was the 12 days of 12 weeks of Bearsmas. And all it was the 12 days of Christmas sung and tailored to the Chicago Bears on something stupid they did, a horrific play, just a terrible defeat every week. It was really, really funny. Anyway, my team's out of the playoffs, so what do I care, right? So pending home sales looking pretty good. Again, we'll have that Case-Shiller Composite 20 Home Price Index number coming out tomorrow. And then, of course, it's bank holiday season. Now, if we look at the calendar here, I am flying to Charlotte. So I won't be doing anything for you guys. I'll just have a Monday, Tuesday show, and I am back in the saddle on Monday, and that will be back to our regular everyday programming. That'll be Monday the 6th. So I just got today, tomorrow. We'll wrap it up, do a little New Year's celebration here, have a nice little glass of whiskey with you guys tomorrow. But then I'm gone. I'm flying to Charlotte to teach a crypto digital assets program for 3 days. I'll be out there with Larry and Kayla. It'll be a fun time. So just a little heads up on the schedule. Okay. Steve says 6.5% mortgage is still a great rate historically. Yes, historically, yeah. It's funny because for people who bought their home in the last, let's say, 6 years or so, they're like, oh, God, I can't imagine 6.5%. It's like, yeah, that's actually historically a pretty good rate. I was having conversations over this holiday break, as I'm sure many of you had, talking about houses and real estate and refi and money and those types of issues. And one individual was talking about how they locked in their 30-year fixed-rate mortgage at under 2%, which I didn't think was possible. I met another person a couple weeks back that had a similar situation, but under 2%. I was like, man, you'll probably never see those rates again. Never see those rates again, but you never know. So, yeah, I think 6.5% is actually not too bad. The situation that those who refinance at such a low rate is you are actually now better not paying off that loan, obviously, taking the money that you would take to pay off that loan, and you could simply put it in something like a CD or put it in a regular savings account like Ally Financial and be earning, 3.8%. So you borrowed at 2%, you're earning 3.8, you make 1.8% rate of return for free for nothing. I mean, not a bad gig, but that doesn't always happen like that. But try to buy my first home for close to what I paid for. Oh yeah, good luck with that. I was having that conversation as well. The first house I ever purchased was in Lake Tahoe. It was $110,000. $110,000. That house now is $1 million home plus, and just, why did I sell it? Silly me. No worries, John. Good to see you guys. I know my intermittent schedule is disruptive. I apologize for it, but you will get back into the regular scheduled programming back in 2025. Okay, let's run through our markets out here today because the last couple days have not been that great. You guys may have seen what I've been posting on Twitter. I decided to do a Twitter tracker. Say that one 3 times. I know it's not Twitter, it's X now, but on my page there, I've been tracking what's going on with the Santa Claus rally and kind of what the numbers have been. And today's picture, I like this one. Here's today's. And you can see we had the first day of the Santa Claus rally, which was the 24th. We had a 1.11% gain. Off to a great start. Number 2, we had almost an unchanged day at 0.01%. Now, negative 1.5 is what we had on our Friday session. That was rough. And I thought, okay, that's no problem. We would still be up. But today, finishing down 1.14 on SPY, that puts a dent in things. So now, at this point where we stand right now, Santa Claus rally, we are at down 1.09%. As you can see in my text up here, we would have to rally 4.42%. Actually, I think it's 2.24. Excuse me. I think we'd have to rally 2.24% to get up to a 1.3% Santa Claus rally gain. Right now we're at negative 1.09. So not looking that great. Certainly would have to be a phenomenal rally. Now, it's Trader Merlin, Steve. Everywhere on everything. On Instagram, I don't really use Instagram, but I need to start doing it more. But yeah, on Twitter or X, I am Trader Merlin. One word. Do not, and if you guys do follow me, be careful. There's a ton of imposters that are. It's gotten better. Honestly, it's gotten a lot better since Elon took over. But yeah, there still are a lot of people that are impersonating me. And yeah, go for the one verified. You can see I've verified. I got the little blue check mark here. I don't know why it says Merlin Roth right there, but yes, I'm here, and I will not solicit or try to sell you anything. Okay, so Santa Claus rally, we'll see. We got 3 days left to move up let me make sure here. I think it's 2.24%. I may have made a typo there, which is what I get for being hasty. And how am I figuring these numbers out? Well, what I did is I went from the Friday game, or so the actual first day, which was the 24th. So I'm going from there, and then I go up here to 1.3% is the historical number, so that's right there. And then I'm looking at from where we are right now to get to that level, about 2.42%. Okay, 2.42%. So yeah, that's gonna be a little mountain to climb. And one thing that's interesting when you look at historical numbers like this, if you are a believer in the Santa Claus rally, as I am, just because statistics validate it, statistics back it up. If you want to know more details, there's an article that was the Online Trading Academy newsletter main article that I wrote about the Santa Claus rally, which covers all the statistics. I think it's a good article. In that, if you believe that 7-day window of time averages a 1.3% rate of return, by that rationale, you should be buying right now because we're already down 1.09%, which means if we actually do get our average, which is still likely, then we should have a significant rally over the next 3 days. That's more than the historical 1.3% because we're already negative for that window of time. Now, I don't know. I don't know if you want to be doing that. It seems like things are starting to get a little worrisome. I think I hear more negative chatter about these markets each and every day, and how it's all was pumped up because of the Trump election victory. Who knows? If you are going to jump on it, be careful because we could see some more downside movement here. As it looks right now, I am inclined to think we are going to see a bit of a rally for the next couple of days, but I don't know if it's going to be 2.42% to get us back into positive territory all the way up to the top there. So that was your kind of surprise piece for the day, or at least for the last few days, has been the volatility in that S&P. Santa Claus rally right now, looking a bit frustrated, as you can tell by my graphic here. I got him looking a little bit shocked. I do have some more Santas lined up so we can see what we're going to get over the next 3 days. Maybe we'll get some tears, maybe some jubilation. Who knows? We will see what that ultimately ends up being when we get to this Friday. All right. Let's see. What a chat coming through here. Let me make sure I get all that. I heard MicroStrategy is looking to distribute more shares and may not be able to do so. Stock tanking. But why is Bitcoin also dropping? Well, you had some negative comments made by the chairman of the San Francisco Federal Reserve, Daly. He was saying that Bitcoin is not like gold, it's not a commodity, and kind of badmouth it a little bit. I think that's part of it. Number two is profit taking. Remember how much we've moved. If something moves up 50%, should you worry about a 20% decline? Probably not. You should just kind of go, okay, that's par for the course. It's just the waves of Bitcoin and crypto. Now let me go to spot price for Bitcoin here, and I'll show you that. And we'll sort here, get my BTC up. Remember we talked about what's that stopping point. It was 92 and also 88, and I'm more inclined to think 88. Just because 92's been hit so many times, they'll probably knife through it. So if you look at let's just start with this rally that started in September, right? Like how quickly this thing moved. If you go from the lows to our peak, Bitcoin rallied 104%. And everyone's like, oh my God, Bitcoin's crashing, it's dying, oh, it's the end. You're down 14%. 14%. There's not a person in this room who would look me straight in the eye and go, oh, that's unacceptable. Oh, 14%, that's too. You would all take 100% gain followed by a 14 or even a 25 or even a 50% slide in price because you're still netting 50%. So to me, this is just natural profit taking. I think it got a little bit ahead of itself, which is what we've been talking about in the crypto sessions. And people like to take profits. And it's a little bit different with crypto, I believe. I think Bitcoin's not really that profit-taking hub that we would get. But because of the options on IBIT, because of perpetual futures now and other ways that we can short the market, I think people are making these moves a little more volatile and wilder swings. As it stands, I still think 88 will probably be your target here over the next couple of weeks. And as we get into January, then we'll see if Trump actually does do what he says he's going to do, then the liftoff will start yet again. So that's my take on it. When you have big impulse moves, you have a corrective phase. That's typical. Strong impulse move. Typically, a corrective phase is like a slower, more drawn out sell-off. So it's outside of the textbook definition of an impulse and corrective phase just because it's moving so quickly, but that's okay. Bitcoin is slightly different. What else here? Negative is good. It's when everybody's positive that gets me where, yep, I'm with 100%. You know, when I go on social media, I was actually thinking if I could write code to identify this and just go, what's the social mood? If everyone's very bullish on anything, you know, if they're all super bullish on Microsoft, then that's probably the time to be bearish. I'm definitely a contrarian type of trader, and I think you have to think that way, or I believe you have to think that way, especially when it comes to these markets. We talked about the Santa Claus rally, right? Or other market mantras, sell in May and go away. The reason that these things work is because people believe that it's going to happen. And if you believe something's going to happen, then you perform an action to make it happen. So Santa Claus rally. You don't hear about Santa Claus sell-off. Well, the Santa Claus rally, as we know, 1.3% for the last 5 days and first 2 of January. Historically, that's the average rate of return. What are people going to start to do? They're going to start to buy. Now, does it work all the time? No. In the newsletter, I talk quite a bit about that, and you do have your outlier years, but over the course of time, these mantras work for a reason. So typically, I'm looking for what the people are saying, and if they're all saying one thing, you start thinking the opposite. I think MicroStrategy is reacting to the dip in Bitcoin price. That's part of it. There is still all this talk about MicroStrategy and the belief. So MicroStrategy now, I think they have 300 million. Let me look at the number of shares that MicroStrategy has for us real quick so I can get that exact number. They're talking about, going up to like 10 billion shares. To understand why that's so significant, you have to know where MicroStrategy stands today. So let me go and look at their statistics here. I'll share that with you guys so you can see that one. So I'm waiting for statistics to load up here because my computer is slow. So right now you have 225 million shares available for MicroStrategy, right? That's total outstanding. And they're selling off a lot of this, selling it, raising capital, and then, buying Bitcoin with it. Now what they want to do, and they can do this, is they can issue more shares. Now, normally, if you issue more shares, it dilutes the value. So let's say I've got 250 million shares of stock, and I decide to issue another 250. In theory, the value of the existing 250 million shares is going to drop in half because let's say they were worth $100 a piece. I had 250 million at $100 a piece. Now I'm going to have 500 million at $50 a piece. That's the general rationale, which upsets a lot of shareholders because, I don't want to lose my value. However, with MicroStrategy, the whole model is different. It's not like they're going to issue these shares and buy buildings and hire employees. They're literally going to take this and buy Bitcoin, which is their main holding. And that should drive the price of Bitcoin up because you have a finite supply of Bitcoin, 221 million. So if it does happen, which I would be very happy if it did happen, you could see a consistent buyer to the tune of billions and billions and billions of dollars pushing the price of Bitcoin higher and higher and higher. So obviously I want it to go through, but there's going to be some obstacles along the way for that to happen. Correct. Right now they're at 446. They just bought some more over the weekend, so they're at 446,000 Bitcoin. But if they get to 10 billion shares, which is the number they were throwing around, I don't know how they came up with 10 billion shares, that could potentially get them, another 100,000. Actually, no, more than that. They could get them another 500,000, maybe a million Bitcoin if they can find it, right? And then it goes back to my discussion of, are they really buying it? Where is this Bitcoin held? So yes, that was something interesting. And I think there's people that are going to start short selling MicroStrategy even more. Right now, the short float on MicroStrategy is 10%. You can find that over here. So this is Yahoo Finance. You notice as of December 13th, when it was the last report for this one, there was 23 million of those shares were short. That's about 10.8% of the float. So 10% short interest is not monstrously high. I mean, certainly when you look at something like Apple, it's definitely going to be higher than Apple. Well, I guess I can't say definitely. You never know. Sometimes these numbers can be way off. Let's go look at what Apple's float is for comparison here. NVIDIA may be a good one as well. Yeah, you have 1% short interest ratio for Apple. 1%. Let's look at NVIDIA. Because NVIDIA has some haters out there, too, that say it's way overvalued and they're shorting the heck out of it. So let's see if NVIDIA is higher than 1%. I'm pretty sure NVIDIA is higher than 1%, but... Oh, wow. Exactly the same as Apple. That's kind of interesting. I feel like I almost hit the wrong button, but it is NVIDIA. 1.05% short float for NVIDIA as well. So very, very light float on those ones. It's typically... MicroStrategy is really high. I'm trying to think of other companies that might have very high float interest. Like SMCI might have very high short interest. Super microcomputer. People think that is just a house of cards waiting to come crashing down. And they are at 20% short. So this is SMCI is double short what MicroStrategy is. Now, why is this important? Well, in my experience, it's between like 1 and like say 7, maybe 8% is kind of in a normal range. There's always people are going to be shorting. So you get 1, that means like very, 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 very bullish environment out there. When you get into the double digits, right, it starts to get a little concerning because now you have all this external pressure pushing the price of those securities down. And it's in the 20s here. It opens up a whole nother door, which is short squeeze. So it's not going to take much buying pressure to push SMCI up that all of a sudden it forces those who are short to cover their position. They may get automatically closed out by their company that they're borrowing from. So interesting. SMCI, that 20% is a pretty high short interest ratio. That could get you a nice short squeeze here on SMCI. But again, you're playing with fire there. There's all kinds of negative stuff about SMCI. Let me see if I can bring up one more thing for you. So FinViz, you can actually go in and you can run a filter through their screeners. So if you're looking for screeners, guys, FinViz has a great one. I don't pay for anything on FinViz. I use it all for free. But if you go to short float, let's go to over 20%, right? Let's see what we've got on this list. There are a lot. Now, it's not telling me exactly which ones because I have to pay for that. But there are a lot. There is 9 pages, and there are 20 per page. Is there 20 per page? I think that's 20 per page. Yeah, 20 per page. So there's 180 companies trading in the U.S. right now that have over 20% short interest. That's pretty significant. Let's go and see even higher. Let's go for something that's got over 30. There are 60 companies that have Kohl's. Look at Kohl's. High short interest on Kohl's. Anything else I recognize here is a pretty big name. A lot of pharma, Beyond Meat, obviously, really heavily shorted. And I mean, look at the price chart of this thing. It's just drifting lower and lower and lower. We talked about this on Power Trading Radio years ago. It's like short Beyond Meat, right? You're going to have so much competition in this space. And I mean, they've just done pretty much nothing but die. Look at this Beyond Meat chart. Wow. Brutal. And just back into 2021, they were at $159, and now they're at $3.86. Jeez. Go. I don't know exactly what these guys do, but were they on that list, that short list? Go. I wish I could pay for this, so I would just hit and see exactly what the short percentage is, but yeah, a lot of these are heavily shorted. Anyway, you got to be careful with them. Anytime you get in that high double digits, it's a great candidate for a short squeeze, and you can see just big time push to the upside. Got to be careful. Remember, GameStop. GameStop was the worst I've ever seen. It was 109 or 120 or something like that. There was more shares short than there were available in the world, which made no sense whatsoever. And I'm really surprised we never saw any regulatory scrutiny over that or comments from regulators just said, hey, how can you borrow and sell more shares than exist, right? That's not mathematically possible. It is literally impossible. So where did that all come from? Nobody investigated that. Is GoGo in flight or was it Bogo? I thought it was like Bogo. Huh. Anyway, GoGo. There you go. GoGo gone. A lot of healthcare on that list. Yep. And Margaret, this is why I don't touch pharmaceutical drug stocks. It's nice you can actually sort here by industry. So look at all the biotech companies. I mean, 1, 2, 3, 4, 5, 6. Actually, I guess I could just go to here. You got 12 of these companies by themselves are biotech, but then you have healthcare information services. A lot of healthcare stuff in here. Yeah, I don't touch it. Stay away. Steve said, "How can 109% short?" That's the question I had, and that's when you look at what Roaring Kitty was doing. My hat's off to him because I didn't see it. He was making a big stink about how can you have more shares short than are available, and he's absolutely right. There should have been regulatory oversight because what happens is you have naked shorting. You had brokers allowing institutions, not retail, we wouldn't let retail do it, but let institutions short more shares than there are. And what that does, that creates artificial pressure to push GameStop down, which is why we had not only the short squeeze, but then all of a sudden the options jumped into this and we had what's called a gamma squeeze on top of that, and it created one of the biggest bull market moves you've ever seen. I mean, it was phenomenal to watch. I was kind of glad it happened while we were doing the show, but this is the result of that short squeeze. Let me get the volume off of here. You can see back in here on, this is split adjusted, by the way, so this is definitely split adjusted. You've got on January 12th of 2021, GameStop was a $5 stock. A couple days later, it was a $10 stock. 3 days later, it was $36 stock, and then all the way, a week later, it was 120. So this is the short squeeze, the gamma squeeze. And if you have a chance, watch the movies on Netflix. I forget what it's called. It was really good, actually. I liked it. It kind of profiled what happened with the whole GameStop saga. One of you probably knows the name. I can't remember the name of the movie, but I did enjoy the movie, and I think it portrayed a good view of it. But yeah, the regulators never really grilled them on how can you have 100 and I think it might have been 140. It might have been more than 109%. I'll have to look. But it was crazy when I saw that. I go, that's something wrong there. Absolutely something wrong. Let's see. I think one Wall Street firm borrows to another Wall Street. Yes, exactly. And what happens is the Wall Street firm says, we're good for it. If we need to find it, we'll find it, but you can borrow. Go ahead. And it's naked shorting. Terrible. Terrible. Surprising me Kohl's is being shorted so much. Easy money. Well, let's look at Kohl's. I mean, I like the store. I mean, they got a little bit of everything. It reminds me of, okay, the old folks in the room are going to kind of resonate a little bit with this. It's almost like a Sears. No, it wasn't Eat the Rich. It was another one. There was a Dumb Money. That's the one. Thank you, John. Yeah, Eat the Rich is a different version of it, but yeah, there were two that came out. I think one was meant to be more of a documentary about what really happened, and then Dumb Money was like a theatrical production about the story, not a documentary, if I remember correctly. But Dumb Money was the one I'm referencing. I enjoyed it. It was fun, and it's interesting because being a trader and really knowing intimately what goes on behind the scenes here, it was great to watch Dumb Money because they got a few things wrong. I remember watching going, that can't happen. That's like, but a lot of it they got right, and it was really interesting. There you go, Kmart. But they just don't have appliances. So, Kohl's has pretty much everything but big appliances. But they have so much stuff in there. No hardware section either, like Sears had the Craftsman tool section, which my stepfather loved that one. From a chart perspective, I mean, you can see why this thing is short. I mean, this is absolutely brutal. I mean, it's really just done nothing for years. You got to ask yourself a question, though. At what point does Kohl's become a target for acquisition? And I mentioned this before on Amazon. Amazon buying different businesses that have retail physical locations. At what point does Amazon go, you know what? We can use Kohl's as our distribution centers and our, physical store presence, and it'll be an Amazon store, and we'll just run our products through there. I mean, that could certainly happen. There's got to be a number that we get to that you get there and you finally say, this is, below book value. The assets this company have are worth X and the price is below that. That's when you start to become a target. And at some point, I believe that will happen to Kohl's. I don't see them just saying we're going to file for bankruptcy and disappear. They've got a name. They've got goodwill. Yeah, ugly. I mean, I wouldn't buy Kohl's. That's for sure. I wouldn't touch this thing. You're catching a falling knife right there. But how low does it have to go before someone says, all right, I'm interested. I'm going to buy this thing. Horrible chart. If it gets a nice chart, yeah. It is a pretty ugly one. Yeah, they're ugly chart. And there's people that are just holding this going, it's going to come back. It's going to come back. It may not, guys. It could definitely go BK. It may happen at some point. Siraj from Madrid. I mean, you're at like 11 p.m., 10, 11 p.m. over there. You should be out having some fun in Madrid. Thanks for joining us today. Where is Eddie? He is the one who's was buying it. Oh, you mean no? Was it Michael? It was Michael. Michael's the one that is always buying the downtrending stocks. That's funny, Steve. Yeah, Michael Anthony, I think is what his name was. Michael Anthony. Yeah, I don't know. I haven't seen him in a while, but yeah, this is definitely on his list. This is his radar of buy right now. Hey, Chris. Sorry I missed you up north, man. There you go. That's right. Chris remembers that one. On the east side of Petaluma, where Chris lives, there used to be a store called Mervin's. Of course, being named Merlin, I had to go shop at that store. I like Mervin's, and yeah, that's more what Kohl's is. Actually, it seems like just a rename. You could swip the name, and they were pretty much the same thing. Lots of different clothes, knickknacks, appliances, fun things. Yeah, Mervin's. Mervin's is the old Kohl's, and maybe we'll just switch into something else, right? Don't forget. Oh, thank you, Gio. All right. Yeah, Chris, I don't know if you saw it. I posted a fun picture of your brother and Kev and Todd and a few others. It was good. Good times up there. Margaret says, Michael will be rich one day when he hits a jackpot. It's for those of you who might be new, we have an individual who comes in every now and again, and I know he's trying to learn. He's trying to... A lot of times people jump into chat. I've seen it in other rooms I've been in, and they're always just trying to pump their stocks, right? Which I won't let people pump like that in here. I'll just mute you because I don't want you guys doing that. But he's always asking about different stocks, and he doesn't pump it. He just asks about it. And every single chart he's brought up, bar none, has looked like this. Remember the last one was Siri. He was all over Siri, and Siri actually started to break out. That was back here when he brought that chart. That was what he was looking at. I'm like, yeah, that does not look good. I'd say stay short. And he was all gloating because it rallied up, and then all of a sudden, we were back down below those levels. Just on its way to zero, Siri over there. Yeah, Kohl's has some good stuff. You do get those crazy coupons. You're right. You get like, you just get 50% off anything in the store today. It's like, you know what? I could use a new pair of shoes today, but I'm a fan. All right. Let me run through our top 8 here, and then I will defer to more viewer questions. We'll go from top to bottom. Top to bottom. I'll go bottom to top. So our 10-year. I've got one little vertical bar left, which I guess I can take this one off. You had a pretty big down day today. It was almost 10 basis point slide. Still, we're probably going to close the year at 4.5% on that 10-year bond. Add 2% to that, so 6.5% is typically what your 30-year mortgage rate is. And that's a ballpark, right? Typically, you add 2% to the 10-year, and that kind of gives you your national average, if you will, of the 30-year fixed-rate mortgage. So nice little drop today, but it's not enough to impact the markets in one day because we've had this big rally up here for the past month. NASDAQ 100 down 1.3% today. It's a 3-day slide for it. Took 3 days to get up there and 3 days to come all the way back down. The big question is, what do we do now? I got a message from someone earlier asking if this is a head and shoulders pattern. And I'll be honest, normally I would say no. However, if you look at it like this, it's really hard to draw the head and shoulder part of this one. But there is a general feeling on this price chart, at least in my opinion, that you are starting to see a mild head and shoulder pattern. And what do I mean by that? Well, you can see right here we form the left shoulder, form the head, and then we form the right shoulder. And now the question is, do we break the neckline? Neckline being this slightly sloping downtrend piece. And if that does happen, where does that put price? That should put price, let's see, there's your measuring object, straight down to the neckline. We'll take that, move that over. And that should put the target here for the NASDAQ, if we get below this, at 20,343. Not good. I mean, that would be a pretty significant sell-off. Obviously not going to happen tomorrow. It's not going to be anything. But yeah, it's a Quasimodo head and shoulders, Margaret. Quasimodo. So, do we get there? I don't know. I'm not going to hang my head on that one now. I still think we're in an uptrend, even though it's starting to show some weakness, right? We did not make a higher high here on our rally up on December 26th. This week has not been kind to the belief that we're in a strong bull market rally. If we were, we would break the all-time highs here that we achieved on December 17th, and we'd all be just cheering and being happy. But the fact that it made a lower high and now is challenging the lows again is definitely a sign of weakness. If we do break that, my guess is you'll probably fall down here to about 20,800 on the NASDAQ 100. So Starting to look a little bit weaker going into the last day of the year. S&P, similar picture. You had a 1.13% slide today on the S&P futures. And really what's noteworthy for me is just the kind of whipsaw volatility we've had for the past 2 weeks. It's been pretty wild. And yeah, I have MicroStrategy long right now. And I sold calls on Thursday at the 370 strike. So for now, I'm okay. I'm underwater on it for sure. We're at 305, I think, on MicroStrategy right now. But again, I'm okay with it for the long haul. Your Russell 2000, rounding out our 3 indexes. This is the weakest of the 3 of them because you see we kind of double topped. You made a new pivot low right here on the 18th on Wednesday. This doesn't look good. Now you're coming back and retesting these lows, which you've already had this line drawn on here at 2,214. After that, you're looking all the way down about 2,100 for the Russell 2000, which is very achievable. It's only a few percentage points away. So not looking so good for the Russell. Things are starting to look a little better for gold, right? The reason being, we did make this new pivot low back on, we'll call it November 12th or 13th, right? It broke this low that existed back in early October. And that was really one of those signs like, uh-oh, here comes the weakness. We should see more downside movement. And then it kind of corrected itself, started to make some higher highs. And now it just feels like it's just chopping back and forth, not really making up its mind which way it wants to go. So not the greatest picture, but at least not making new lows. It's kind of holding itself here, which is good. My gut feeling would tell me that if more inflation does persist or we get political issues, that gold will start to creep back to the upside. And then there's Bitcoin, which, of course, we talked about this one already. A lot of volatility going on in BTC. And again, that's profit taking, that's political, it's posturing, it's people talking about it on social media. This is probably the most talked about instrument right now. And one thing that's interesting, I read an article today, maybe yesterday, that talked about the struggle that Bitcoin is having is a lot of fund managers, like investment advisors, aren't recommending it at all. They're not even talking about it. Then I should have written the stats down. It was something like 85% of customers, 85% of the customers, might be higher, were coming to their financial advisors and saying, hey, what about having some Bitcoin in my portfolio? And in the study, it was like 3 or 5% of the advisors said, okay, we can put something in crypto digital assets. The rest of them, no. Now, that is a big disconnect, right? When your financial advisor is saying, hey, stay away, but the population is saying, we want it. If that starts to balance out, what you're going to end up getting is more financial advisors putting some crypto or digital assets in portfolios, and that, to me, would be a big driver of price going forward. So it should be pretty interesting year 2025. Again, I'm very bullish on crypto, and it's just one more of those adoption pieces that we may see push the price higher in 2025. Dollar index, sideways, 4 days of yawn fest. Really, if nothing has happened here for that dollar index, so nothing really to speak of. The positive side to this, at least from upside trajectory for the dollar, is this is a bullish flag. You've had a real strong impulse move up, slow, slight move down, almost sideways. Looks pretty good. To me, this is actually a rather bullish sign for that dollar index. Of course, time will tell. And then finally, crude oil, which has really just been nothing, right? It's been months. It's been 2 months of just sideways chop between 67 and 72. Yes, it's a $5 range, so there's opportunity in there if you want to play those swings. I would say, you could put a nice little yellow box around this, which I haven't done in a while. Ever since Tom left, we don't do these yellow boxes much anymore. Let's go there, and I'll go a little bit more conservative. This is the higher end of the range, but as you can see for the past month and a half, it hasn't been able to break above this 71.65 mark. So I would put your little yellow box there, and now you're doing spread trades or shorting the peak, buying the bottom, or what other strategy you may have along the way there for that one. So that's your top 8 markets, and that's all I got to say about that. What else do I got in here? That's what you get with a financial advisor too conservative. Well, remember, Big Eb and others, that they can't be overly aggressive, because if you start to lose money, the consumer is going to file complaints. They'll go to the FINRA, they'll go to the SEC, they'll go to regulators, and I lost money with this financial advisor. So there's a reason they're pushing back, and I totally get it. I'll be honest, if it was me as a financial advisor, I would probably discourage people. I would be okay with some, but it would be a very small percentage of their portfolio. It would be more of a discussion of, how much do you want to have in commodities like gold and silver and copper and things like that? And if my client says, I want to have 50% in gold, silver, and copper, I would say that's probably too much. That's too heavily weighted. Maybe do 10%, right? And then out of that, maybe I'd have a percentage, maybe half of that 10%, so 5% max would be for crypto and digital assets. But I certainly wouldn't want to have a client come in all excited about Bitcoin, as you see on the net. And every now and again, you get somebody who's posting on social media, on Twitter, that they put their entire life saved, everything they own, they sold all their assets, and they bought some meme coin, and they made $100 million off of $50,000 investment, right? You see that stuff happen, and unfortunately, that lures people in. The reality is, it's not going to happen. It's too risky. Every now and again, we'll all hit a nice winner with crypto. It's just bound to happen if you spread your portfolio around enough. But you don't want to put it all in on one. And certainly, if you're using your retirement, stuff you plan on living off through retirement, put just a small amount in crypto. What if all financial advisors would put 1% to 2% in Bitcoin? I would be pleased. Yes, I would too. And we're not there yet. Remember, the rules are going to change. In 2026, we get the BIS, the Bank of International Settlements, will now make it okay for banks to have their some of their capital in crypto and digital assets. Bitcoin is that kind of tier 1 asset as well. So once we get more regulation, more political acceptance, then those numbers will start to tick up, Eb. And it may be, as I'm kind of pointing out, I think a more diversified, somewhat aggressive portfolio would have about 10% in commodities. So if I could get, financial advisors to get that 1% to 2% in Bitcoin, yeah, plausible. We'll have to wait and see what happens down the road. Is December historically bearish for gold and silver? I don't know, Steve. That one I don't know. I mean, we could do a real quick impromptu study and just go into things like GLD. Oops, dyslexia setting in today. Come on, Merlin. Go look at something like GLD and go just on monthly time frame here, and just do it by quick glance. So if we look at November, December of last year, I would say it's a wash. So November was a pretty big down month. December was a big up month in 2020. Go to 2021. November was an up month slightly, and December was an up month. So it worked great in 2021 from a bullish perspective. 2022, I'll just do the past few years. I don't want to do all of them. November was a big up month, and so was December. So worked great in 21 and 22. Let's go to 23, and I'll wrap up on 24. Yes, you had a bullish November in 2023 and a bullish December. So those 2 months were definitely bullish in 2023. And what do we have here for our year now? We've got a pretty bearish December and a pretty bearish November. So doesn't always work. I'm sure the Stock Traders Almanac will have all of those stats, facts, and figures, but I don't have the Stock Traders Almanac here with me. Stock market close, a remembrance of Jimmy Carter. Yeah, January 9th. January 9th is that day when they have that James Earl Carter Memorial Remembrance moment. And we talked about that one earlier. Did you read about the Dogecoin millionaire who did not sell? No, I didn't. I hear about him all the time. I guess I just kind of tune that stuff out. I've known a couple multimillionaires that are made off of crypto. One guy actually worked for Online Trading Academy, and he was huge into Litecoin. He put everything he had in a Litecoin and was rewarded, or that one heavily. But somebody was asking me about Pepe Coin, and I wasn't asking me. It was a social media thing. They were asking about Pepe Coin, and said, "Oh, Pepe has to make a choice." So let's real quickly go look at Pepe Coin, even though I can't believe I'm going to look at this garbage right now. But if we look at it on a daily time frame, if you look at it from just a technical perspective, I mean, everything applies that you would have me normally analyze, which is, okay, you've got this kind of compression going on with price. You can see we're kind of, and I know I'm not drawing the best triangle, but what you have here is kind of a compression, right? It's like a spring being coiled and pressed together. And ultimately, it typically breaks out. Now, for those of you who follow me long enough, you should know what the answer to this is. Which way should this break? The argument for this guy was that this thing's going to break. It's going to break out. Where do you think it's going to? What's the higher probability of this breakout occurring to? Up or down? Well, answer is fairly easy. The trend is your friend until the bend at the end. So if you're doing this as a inverted flag, which is kind of what this is, it's like a bearish flag formation, You could argue that that's your target, and that would put this less than zero. Oh, almost zero, which was my joke to this guy. Yeah, there you go, Lisa. Vikram, yeah, down. That's just the higher probability. Same market, Big Eb. And it doesn't mean it has to. It's just that's the higher probability. And so I said, come on. First off, this thing's a meme coin. All meme coins will go to zero. Remember, Pepe, on their website, which they have now taken down, by the way, it serves no purpose. It has no value. It doesn't do anything. There's no team. There's no roadmap. There's no nothing. It said this on their site. You guys all watched this with me live multiple times in this program. So it's going to go to zero. And I recanted that. I said, or maybe 0.000000001. At some point, it'll just reach zero mathematically, but it won't actually get to zero. But yeah, these are all going to go away, guys. All these meme coins like Floki and Shiba Inu and Pepe and Bonk and all, just crap that doesn't do anything, serves no purpose, will all go to zero eventually. I'm not shorting it, but I'm not playing with it either. So, but technically, it has the same basic patterns, and I'm still a believer that these patterns reflect human behavior and psychology. So, if you understand what the people are about to do because of a price pattern, you should act on. I think the equity markets are much more baked in with regards to technical analysis. You have too many whales, which is an individual who controls the price action. One or two individuals. It could be a small group, but they could collude and say, hey, let's take this thing down right now because we have so many coins or tokens. We can push it down and then pop it back up. So I'm not a fan of the meme coins. Can you get rich off them? Absolutely. It's just not worth the risk. Crypto by itself is risky enough, but juggling these meme coins, in the crypto class, I do have a spot for meme coins or shit coins, and I say, look, if you're going to have it, you should just have a very, 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 very small percentage of your overall portfolio in crypto in these meme coins. Fun to play with. All right, let's see what we got. That was my dog's name, Pepe. Nice. Probably going just because it's trash and spotted the chart. Do you own XRP? I do own XRP, yes. XRP has had a bit of a revival, right? First it was the kind of quasi-victory against the SEC, but now the euphoria is kind of fallen out, and I think people are starting to realize the truth about Ripple, which is it's centrally controlled. It's not going to be the payment rail for all U.S. businesses in the United States. It's just there's a lot of misconceptions about XRP, and they are very centrally controlled. Ripple Labs, who created the project, has 43% of all of the tokens or coins. At any moment, they can manipulate price, and they're consistently selling Ripple on the open market, which, if no one's buying Ripple, it will push price down because they're flooding the market with more and more coins or whatever every day for Ripple. So yeah, I do own Ripple. I bought it back in 2017, so I'm way back here. All right, I was in early 2017. I was buying Ripple, so 17 cents is my average price. So I'm okay with my Ripple holdings. I just don't really believe in Ripple as a project. I don't see it being the lead dog that they keep claiming they are, and all the Ripple fans are just, they're so, get on any social media platform. They call them the XRP army. I own some, but I'm walking away. Talking about crypto, what's your take on Tron if you have time to cover? No problem, Siraj. So TRX, I do own Tron. I have a lot of Tron as well. Certainly giving back a lot of profits over the past couple weeks. But if you look at, again, this is why you have to do your research, folks. Tron started as a ripoff. I mean, Justin Sun took a copy of Ethereum's code, because it's open source, did a search and replace on the white paper, which tells you what Ethereum's going to do, and he just replaced everything with Tron. And then he took the code, made a couple minor changes, and started the Tron network. Now, the good thing that he did is Justin Sun went out and bought, once he had all these billions of dollars back in 2017, he bought a bunch of companies like BitTorrent and a few others, and now he's kind of both horizontally and vertically integrating his company. He owns Poloniex Exchange as well. So now you're buying these assets and you tie them to your blockchain. Now you give your blockchain more value. So if I hate to say it, it sounds awful, but if I had to choose between Ripple and Tron, I'm going to get a lot of hate for this one, but I'd pick Tron because it's building an ecosystem. Ripple Labs is a privately held company. They own most of it, and they're not really doing much. They were designed to be a payment network, but there's thousands of competitors that can be a payment network. I mean, any crypto theoretically could be a payment network. Not Bitcoin because it's too slow, but I'm okay with Tron now. I think Justin Sun is kind of an attention-seeking egomaniac. I think he's a bit of a wild card. But if Tron keeps building that ecosystem out, getting more projects to build on top of it, it could actually, be something substantial. Not quite the size of Ethereum, but it could be, one to hold in your portfolio. So there you go. That's my take on Tron. All right, what do we got? It's time. No 1 hour shows today. I already went through your economic calendar, so let me show you that one again, just so we can see what happens for tomorrow, the last day of the year. If you're trading Europe, you got bank holidays pretty much across the board, but we do have one announcement happening 30 minutes before the markets open tomorrow, and that's going to be the S&P Case-Shiller Composite 20 Home Price Index year over year. Whew, a lot to say in one time. That's expected to drop from 4.6% to 4.1%, and that is your news for tomorrow. Now, as far as tomorrow's topics, it's the last day of the year. Email me. Throw me stuff you want to talk about. You can go to, I'm doing a show tomorrow, Margaret. Yep, definitely doing a show tomorrow. Last one for the year, and then last one for the week also, because I'm going to be in Charlotte. I leave for Charlotte Thursday, Friday, Saturday, Sunday, and then I have a flight back early Monday. I don't have my flight time. I may be doing a show on Monday. I think I fly out early. I'll let you know. I think... Yeah, I would say it's probably 50-50. I can't remember when my return flight is on Monday, but if I'm back in time, I'll do a show on Monday. If not, I won't be doing a show on Monday, but then we'll get back to our regular schedule. All right, guys, thank you so much. Hope you enjoyed it. Hope you learned something. We've got 1 day left. 1 day left in 2024. Make it a good one. I hope you have a green day tomorrow. If you want me to cover something, email me, tradermerlin@gmail.com. That's it. I will see everybody tomorrow. Take care.